Welcome to Ready Claim, your reliable guide to everything insurance. Today we're shedding light on a crucial topic: lease gap insurance. This complex subject is about to become a whole lot simpler. Stay with us as we delve deeper into the world of lease gap insurance. First things first, what exactly is lease gap insurance? Well, imagine leasing a car and unfortunately it gets totaled or stolen. Lease gap insurance swoops in to cover the difference, or the gap, between the car's actual cash value and the remaining amount on your lease agreement. It's a bit different from standard gap insurance, which is designed for purchased vehicles. The key distinction being that lease gap insurance takes into account the unique risks of leasing. In a nutshell, lease gap insurance is your financial safety net if your leased car is stolen or totaled. Now that we know what lease gap insurance is, why is it so important? Leasing a car presents unique financial risks. Imagine this: you're driving a leased car that gets totaled in an accident. Your insurance pays the current market value, but it's less than what you still owe on the lease. That's the gap. Lease gap insurance steps in to cover this difference, shielding you from potentially hefty out-of-pocket costs. To sum up, lease gap insurance provides essential protection against the financial risks of leasing a car. So, how does lease gap insurance work? Let's imagine you lease a car and it gets totaled in an accident. Your insurer determines the car's actual cash value is less than the remaining balance on your lease. Here's where lease gap insurance steps in. It covers the difference, or the gap, between these two amounts, ensuring you're not out of pocket for a car you no longer have. In essence, lease gap insurance bridges the gap between your car's actual cash value and the amount you owe on your lease. Let's talk numbers. How much does lease gap insurance cost and who provides it? The cost of lease gap insurance varies, influenced by factors such as the car's value, lease length, and your personal driving history. Now, on to providers. Companies like Allstate, Progressive, and State Farm are renowned for their lease gap coverage, each with distinct policies and varying levels of customer satisfaction. Remember, when choosing a provider, it's not just about cost. Consider their reputation, customer service, and the specifics of their coverage. Now on to the claim process. What happens if you do need to make a lease gap insurance claim? Firstly, you'll need to inform your insurer as soon as possible. They'll guide you through the claim process, which typically involves filling out a claim form and providing necessary documentation. This might include your lease agreement, evidence of your vehicle's value at the time of loss, and any details about the incident. While we hope you'll never need to make a claim, it's essential to know the process and be prepared. Before we wrap up, here are some insider tips for those considering lease gap insurance. First, shop around. Don't just settle for the first quote you get. Second, timing is crucial. The best time to purchase lease gap insurance is when you're signing your lease agreement. Lastly, always read the fine print. Ensure the policy covers the full gap between your vehicle's depreciated value and the remaining lease amount. Armed with these tips, you're well on your way to making an informed decision about lease gap insurance. That's a wrap on our deep dive into lease gap insurance. We've covered its importance, how it works, costs, claim process, and essential tips for buyers. Thanks for joining us at Ready Claim. Stay informed, stay protected, and we'll see you in the next video.